Hi all and welcome to my second video related to the first lecture, Bitcoin Education, a brief history of money. In the first video, we discussed about the history of money till the Roman Empire, to the decline of the Roman Empire, and in this video, we will move on from there. The reference book is always the Bitcoin Standard. I always recommend to read it in order to understand the Bitcoin revolution. So we will go on today with discussing about the Renaissance, La Belle Époque, 1914, government money, and what happened between the start of the First World War and the end of the Second World War, what happened after Second World War, and then lesson learned. If a brief discussion about the Renaissance, as you know, it started in Florence, and it started exactly in 1252, and not by coincidence, also because there was the Fiorin was minted in that city, and it was followed by Venice, and soon also in 150 European cities. In fact, history shows that a sound monetary standard is a prerequisite for human flourishing. So we need a sound monetary system in order to flourish as a civilization. And through the centuries, the states moved to the gold standard. Gold standard meaning that the money that the government were printing or were minting were also backed by gold. And it started in UK in 1717, just before the century of UK, between 1750 and 1850, also not by coincidence. And at the end of the Napoleonic Wars in 1821 set the beginning of the gold standard in Europe until 1914. So between 1821 and 1914, it was the century of the gold standard. And individuals were carrying paper receipts instead of gold or silver. And the money that they were having, they were backed by gold in the banks. So it was chosen to use this because they had better salability over space and scales, much better unit of account. It's much better to move and to carry paper or coins than gold or silver, and much better to divide, so to have to divide for small transaction. And as long as gold and silver were used to make payments directly, they both had a monetary role to play. Once paper money started to the existence of silver was not anymore justified because silver was good because it was a good unit of account. It could have been divided easier than gold. But paper money or coins could also be divided easier than silver. That's why the silver role for the in form of money ceased to exist, and there was not anymore silver stopped to be a form of money. And in fact, the value of silver collapsed. And so we had gold in centralized banks, and there was an advantage and disadvantage. The advantage was it gained salability across scales and location because the money you can transport easy and easier to divide, but lost its property as cash money. And during the second half of the 19th centuries, the gold standard allowed capital accumulation to finance industrialization, urbanization, and the technological improvements that shaped our modern life. And in fact, the gold standard was the age of capitalism, increasing welfare, liberty, democracy, and both political and economic. And we will see why. And we will see why in future videos. The fatal flaw of gold standard is that it is relying on centralizing physical gold in banks. And so it would be that the settlement in physical gold in cumbersome, expensive, and insecure need to rely on centralizing physical gold in banks and central banks. They could create, and central banks could create more money unbacked by physical gold. Till the gold standard, every single money was backed by gold, but there was the temptation having this in central banks to print more money. Only a minority of knowledgeable economists were warning that wealth cannot be generated by increasing money supply. And with the start of the war in 1914, in order to finance it, the governments in all Europe needed to finance their expenses and exited the gold standard, reducing the value of their currency. That's why in the history of money, 1914 is a very important year. Is when the countries, in order to finance the war, they exited the gold standard and they decide to print money. And in fact, we can see there is a difference between gold government money, redeemable in gold, as it was during the gold standard, and irredeemable government money. So money that they can print and don't need to be backed by anything. In fact, with some money, government has to be fiscally responsible of how it spends. But instead, without having sounds money, government can also print money as it need. And the big question is, should government manage money supply? In fact, in our century, we think that it is the normality. Manage money supply, instead, it is the problem masquerade as the solution. So managing money supply, it is the problem. In fact, for Keynesian and Marxist, money is whatever the state is money. But the reality is so completely different. Having been using gold for thousands of years is already a refusion of this theory, because gold was not chosen by the government, but gold was chosen by the free market. And today there are two mainstreams economic schools, Keynesians and monetarists. They divide for other topics, but they agree that the government, in the principle that the government has to expand money supply. This is also a wrong principle, and we will see why. In fact, for Keynes theory, the most important metric in determining the state of the economy is the level of aggregate spending across society. So more we spend, more the country is flourishing. This is the Keynes theory. And all government money started with being redeemable in gold and silver. It was not the government, but the society who decide that gold was money. So this is also a refusion of the theory. We stopped to move to make transaction with gold, giving gold to banks or to states, with the agreement that the paper money will be backed by gold. But then at one point it was decided to stop this rule and to print money. And in fact, there is a big difference between World War One and the previous ones. Why is called World War One the first World War? It's not just because it was most technologically advanced with weapons, but it's also because um, how long did it take? These 4 years, and how many people died and how many people were involved. In fact, in 1914, countries suspended the gold standard to finance the war. Previously, the wars were sustained by the treasury of the government. But while World War One, if it remained the case, World War One probably would have lasted just a few months. And by printing money, the war was sustained by the wealth of the whole country. In fact, the war was financed by the European countries devaluing their currency, and therefore it lasted 4 years. In fact, if you see, in 1918 versus 1914, the currency crash in Germany was minus 49%, in Austria minus 69%, and in Italy minus 23%. And yes, there were other wars who were longer from the beginning to the end, but not total war as in every month of the war in the past. So this war was the biggest so far, also because the government decided to print money, so to expand the expense of the war was not just the treasury of the government, but also the whole wealth of the country, because they devaluate the currency. And during the gold standard, exchange rate of currencies was the conversion between different weight of golds. After it, it was determined in the international agreements and meeting. This also was another difference between what happened in the past and what will happen in the future. Moving on, after the First World War, we see that in 1920s, US and UK started a high inflationary policy, so printing money supply, thanks to the Keynes theory. And this it was one of the causes of the Great Depression that started in 1929. In the 1930s, US government tried to control the price, a strategy that is always counterproductive, resulting surplus and shortages. In fact, example, when the wages were too high, the product were burned in order to keep the price high, having therefore people hungry and without work, and producer who will not hire them because the wage were too high. So every time that the government is trying to decide the price, is always a wrong decision because it creates or surplus or shortages. Then another important date is 1944 with the Bretton Woods Conference. US became the center of the global monetary system. And with the okay of the other central banks, whose currencies will be convertible to dollars at fixed exchange rate, while the dollar itself will be convertible to gold at a fixed exchange rate. So US will take gold from other countries with the premise to redeem dollars in gold to other central banks at a fixed rate. And the US become the leader of the monetary policy of the world. So gold could be only be redeemed by dollars, and the other countries could redeem their money with dollars. And there was the institution of the International Monetary Fund, EMF, as a coordination body between central bank with the aim of the achieving stability of exchange rates and financial flows. In fact, Bretton Woods tried to achieve through central planning what was achieved spontaneously during the gold standard, where the market was deciding which were the right price. What after World War II. So with gold standard, we see that the value of currencies in country will be standard because it was related to gold, and movement of goods and capital will not affect the value of the currency. Without gold standard, as the country moved, there were imbalances of currencies generated by movement of good and capital, with devaluation driving to further devaluation, and currency appreciation would lead to more appreciation. And in 1971, also another important date, Nixon announced the end of the dollar convertible to gold. It was completely stopped the gold standard. And US increased the policy of expenditure, causing a large drop of purchasing power. In fact, between 1916 and 2015, the average supply growth rate of 160 countries has been 32.1% per year, an impressive amount. And in the top 7 countries, 11.13%, still a very high amount of supply increase. If you see, as we discussed in the previous video, gold was between 1.5 and 2.5%. And hyperinflation is a phenomenon only due to government money, never happened during the gold standard. The loss of economic value is a complete breakdown of the structure of the economic production of a society, built over centuries and millennia. In fact, hyperinflation during the Weimar Republic fueled also the rise of Adolf Hitler to power. And we can go on with the some very important slides from a presentation on a video of Anthony Pompliano, also a very important influencer in the Bitcoin world. You can see on the left picture that there was a period, 1947-1979, called the Great Prosperity, where you see both productivity, compensation, and wage were similar. So everything was growing together, where were still a partial gold standard. Then Nixon in 1917 decided to stop the gold standard. So the dollar was not backed by anything, and they were free to print how much money they want. And they started to print more and more money, sustained by the false theory from Keynes, saying that more we spend, more the state is flourishing. Completely wrong theory. And what happened is that the productivity went up, but the wage and the compensation remain stable. So we become more and more productive with technology, and with technology, with advancement, shorter cycle of production, but the wage and compensation were stagnating. And you can see how the valuation of the currency and the devaluation of the purchasing power, especially of the lower class who is living paycheck to paycheck. If we make a comparison between 1971 and now, 1970 and 2017 is here. You see that a new house in 1970 was costing about 2.5 times an average income, while in 2017 was 6 times more. And if you see the cost of a new car, the minimum wage, movie tickets, gasoline, related to the average income, everything was costing more in terms of the purchasing power. And this is only because they stopped the gold standard, and they started to print money thinking that in real that everyone is becoming more rich because we have more money, but in reality they just devaluated the currencies, they distort the price, and the biggest effect was in the low on the low income people. Which are the lessons learned, considering not only this video but also the previous video? We learned that hardness of money depends on ability to not to inflate the supply, as we saw with the prehistoric money in the previous video. Increasing of supply is a continued devaluation of the currency. In fact, the constantly increasing of supply means a continued devaluation of the currency, expropriating the wealth of the holders to benefit those who print the currency and those who receive it at the earliest. History has shown that government inevitably succumb to the temptation of inflating the money supply. Government control of money has turned money from being the reward for producing value to the reward for obedience to government officials. And for Austrian economics, the criteria to determine what is the best money revolved around understanding the salability and what the market will choose as money. So it's not the government should belong to the government. The money should belong to the government, but in a free market, people decide what is money, and money, Jen, is what they are more sellable across time, space, and scale. And sound money, they are money chosen by the market freely and completely under control of the person who earned it. Gold was that form of money, not because it had an intrinsic value, but because it was satisfying the previous condition. And this the last comment will be, I hear so many comments, people say, "Ah, I don't believe in Bitcoin because it doesn't have an intrinsic value." Also, gold has zero intrinsic value. The value of gold sometimes is used, okay, for decoration or in industry, but this is another is not related with the monetary value, is related with the industry value. But as monetary value, gold or Bitcoin, they, both of them, they don't have intrinsic value, but they are very good in considering how they are sellable across time, space, and scales. Both very good, but Bitcoin much better than gold. And this we will see also in the next lectures, the reason why. I hope you enjoyed the video. Thanks, and see you in the next video. Bye.